Welcome to the Explainer. So picture two 25-year-olds making the exact same starting salary. Fast forward 10 years. One is wealthy, while the other is totally stuck wondering what happened. Here's the crazy twist. The better saver actually ended up poorer. Sounds totally backward, right? You know, since childhood, we've all been spoon-fed this one golden rule. Just save your money. And hey, that's great advice. Until it isn't, because pure saving eventually kills your wealth building. Actually, hoarding too much cash in savings is literally costing you thousands of dollars over time. The absolute worst part of this whole thing, most of us never even notice it draining away. Okay, let's say you've got 10 grand sitting proudly right there in your basic savings account. It feels super safe, highly responsible, and like you're making genuine progress. We all feel it. But listen, while your money just sits there completely still, the world keeps spinning incredibly fast. Rent skyrockets, groceries inflate, and literally everything in your daily life just keeps getting pricier. That's the real danger. Your balance stays the exact same, but your actual purchasing power plummets. It's basically a wealth treadmill. You're sweating, saving hard, but you're going absolutely nowhere. We call this the stagnation trap. You become a great saver, but never jump into investing. That one little choice to avoid investing, it creates a massive, life-altering gap 10 years down the line. But hey, good news. You definitely don't need to be rich or some fancy Wall Street guru. You literally just need a simple, clear path to finally get your money working for you. So, gonna stay stuck on that treadmill? Or take your very first step toward investing today? Okay, let's jump right into a hidden financial reality that almost nobody talks about. See, saving money and building wealth might sound similar, but they're totally different ballgames. Here's the deal. Saving protects your cash, right? But investing is what actually grows it. So let's meet Alex. He's a textbook example of someone doing everything right financially. He dodges debt, budgets like a pro, and stashes away cash every single month. As the years roll by, his bank balance just keeps climbing higher and higher. Naturally, Alex is feeling pretty great about his growing stash. I mean, who wouldn't? But then, boom, an unexpected reality check hits, and things get a little weird. Even with his bigger bank balance, the cost of housing and groceries is rising way faster. It's super frustrating, right? Why does that finish line feel like it's constantly slipping away? Well, it all boils down to one crucial idea, separating savers from true wealth builders. Savings accounts grow incredibly slowly, while entire markets and industries are out there exploding rapidly. If you only rely on what you personally save, you're carrying that burden completely alone. Now, saving definitely isn't bad. Actually, it's your foundation. Think of it as your launchpad. But here's the golden rule. That launchpad, it's never your actual final destination. The real trick is knowing exactly when you need to flip the switch toward investing. But before firing up that investing rocket, what's the safety net you absolutely need first?
Before investing a single dollar, you've got to answer one really vital question. What happens if life punches you tomorrow? Sounds dramatic, right? But that's exactly how financial emergencies feel.
Everything's fine until bam, your car dies, your laptop fries, or your job just disappears.
Okay, let's dive into this. Smart investors don't start with investing. They always start with protection. Think of it as your financial airbag. It's a safety net you honestly hope you never need. But man, when things go south, you'll be unbelievably glad it's right there waiting for you. Let's move on and see how this builds. Exactly how much cash goes into this safety net. So the crucial point is this simple rule. Save up 3 to 6 months of living expenses. And hey, that's strictly essentials. Rent, groceries, bills, it totally excludes luxury buys or vacation money. This fund is purely for those absolute fundamental costs needed to keep your life running during a crisis. Now, what's really interesting here is the trap. This is exactly where people get super impatient. They see stocks soaring, jump right into fast investing, and completely skip building that crucial safety net. Imagine investing every spare dollar, then suddenly getting hit by a massive emergency where you need cash now. And this brilliantly illustrates the pain. Being forced to sell investments during a crash is absolutely devastating. You see, the primary goal here is protecting your long-term investments from your short-term emergencies. As the saying goes, it protects your emotions from your fear. It gives you ultimate peace of mind. Because the goal isn't just hoarding cash, it's building a rock-solid financial foundation for your future.
Once that foundation is set, all your future investing becomes way less stressful and so much more powerful.
But hold on, even with this critical safety net built, there's still one more obstacle to real wealth.
So what is the silent financial leak draining your money every single month? We'll tackle that next time.
Before investing a single dime, we've got to eliminate a silent wealth killer. You might feel totally ready, but a heavy chain holds millions of people back every single day. That chain is debt. It's an exhausting weight that kills your momentum and constantly drags you backward. But not all debt is equal. Low-interest debt is a manageable backpack, while high-interest debt, total monster. Imagine carrying a credit card with 20% interest while simultaneously trying to build an investment portfolio. It creates a violent tug of war, literally pulling your hard-earned progress in completely opposite directions. It's like pouring water into a bucket, but high-interest debt is a giant gaping hole leaking everything. Many wrongly ignore this. Eliminating expensive debt gives you a guaranteed, unbeatable return on your money. Every single dollar you save from ridiculous interest charges instantly becomes a dollar working for your future. Beyond the math, shattering those chains unlocks huge psychological benefits, giving you real peace of mind. With that monster destroyed, your money finally accelerates down the wealth-building road instead of fighting against you. Now you can funnel those old interest payments directly into investments, effortlessly boosting your future wealth. So before chasing market returns, ask yourself this: what leaky bucket in your finances needs patching today? Okay, let's dive into this explainer. We're looking at a rare investment with an instant return. And I don't mean next year, guys. Definitely not 10 years down the road either. I mean, literally immediately. An instant return the very second you join in. Sounds crazy, right? But it's sitting right inside your workplace, just completely ignored by most. The secret? It's a hugely underused benefit called the employer retirement match. It's brilliantly simple. You invest some cash, and your boss just drops more right alongside it. Think about that. That's exactly why we call this totally free money. Picture two coworkers making the exact same salary, but only one actually takes this match. See, year after year, that matched account just skyrockets so much faster. They aren't smarter or working harder, They just accepted the free offer. It's undeniably the easiest win in personal finance, yet so many people just skip it. Why? Well, maybe they don't get it, or they figure they'll just do it later. But honestly, later is just a missed opportunity, because let's face it, later never comes. So here's the lesson. Stop chasing hot stocks. Grab those guaranteed workplace benefits first. Building wealth isn't always about finding hidden gems. Sometimes it's just seizing the obvious ones. And once you've secured that match, it's time for the part that makes everyone nervous. So are you ready to finally step off that diving board and start actually investing today?
Okay, let's tackle the absolute biggest mental barrier stopping you from starting your investing journey today.
I don't have enough money. Honestly, if you've ever thought this, you're definitely not alone.
It's a huge myth that you need thousands of dollars or some secret Wall Street knowledge.
The reality? It's much simpler. The absolute hardest part isn't the money at all. It's just starting. Picture these two scenarios side by side. Who do you think actually has the real advantage here?
The early bird wins. Time is a way more powerful asset than your starting bank balance.
So what if you simply invested just $50 a week instead of waiting for a windfall?
Not 500, not 5,000, just an amount you probably won't even miss.
I'll be totally honest. Early on, the numbers won't look impressive. It won't feel super exciting.
You won't feel rich overnight. And sadly, this lack of instant gratification makes so many people quit.
But wealth actually builds quietly in the background. One contribution, 1 month, 1 year at a time.
Here's the mental shift. You got to focus entirely on building the habit, not stressing the dollar amount.
Building that habit naturally creates reliable systems, and those systems eventually generate literal life-changing results.
If you wait for the perfect moment, amount, or market condition, you might literally wait forever.
So seriously, stop waiting. Start small, start imperfectly, but just get on the path today.
But once you start, the big question is, what should you actually invest in? That's for next time. Let's talk about why so many of us totally freeze up the moment we finally decide to invest.
You want to build wealth, right? But boom, you're instantly trapped in this overwhelming maze of financial jargon.
Stocks, funds, crypto, real estate, it's just too much. That sheer volume immediately causes massive choice paralysis. And most beginners falsely believe investing means finding that one magical, hidden stock nobody else knows about.
Think of a grocery store. Betting your life savings on just one single apple is incredibly risky.
Yet that's exactly the wild gamble people take when they dump all their hard-earned cash into one stock.
Compare that wobbly, single-company risk to the rock-solid stability of owning hundreds of global companies all at once. This is exactly why smart investors eliminate that massive risk. They just buy broad market index funds instead.
Here's the crazy truth. Keeping your strategy incredibly simple actually outperforms complicated, messy investing almost every single time. See, beginners fall into a trap. They get bored, so they start chasing flashy, exciting market trends.
We gotta reframe this completely. Successful long-term investing is absolutely not supposed to feel like an action movie.
Boring actually just means consistent, and as you watch your wealth grow, consistency always wins out over time.
You don't need 50 investments. You definitely don't need a crystal ball. And you don't need a genius IQ. The absolute smartest thing you can do is choose a strategy that's simple enough to actually stick with. Once you've got that simple plan, just set it to invest completely automatically. Then, literally, just walk away. So ask yourself, are you chasing the temporary thrill of complexity or building a delightfully boring foundation for wealth?
What if building lasting wealth takes way less motivation than you'd think? Let's dive in. What if the real secret isn't working harder, but actually just making fewer decisions? Here's a shocker for you. The biggest threat to your money isn't the stock market. The real threats? Well, they're your own emotions, procrastination, and that classic, I'll do it tomorrow mindset. The ultimate fix is automation. It literally removes your own willpower from the entire equation. Why? Because willpower is super unreliable. It's basically a battery that totally drains by dinner time. Picture this. Payday hits, and your cash automatically flows right into your investments. Boom. Done. Talk about relief. No annoying reminders, no internal debates, and absolutely zero second-guessing yourself. Contrast that stressful monthly struggle of doing it manually versus just setting it up once.
So looking at these two, who do you honestly think actually sticks to their plan?
The answer is obvious. Consistency completely crushes short, intense bursts of motivation every single time. Building real wealth is all about those simple, repeated actions, not sudden bursts of inspiration.
Now for the ultimate test. Automation becomes an absolute lifesaver when the market takes a dive.
When stock prices drop, our emotions skyrocket. And honestly, that's exactly when most people panic and stop.
But an automated system, it doesn't panic. It completely ignores those scary headlines and social media noise.
Think of it like a giant, invisible shield, protecting you from your absolute worst impulses.
This barrier essentially forces us to stay laser-focused on the long game.
And look, the goal here isn't to magically turn you into some flawless, perfect investor.
The real objective is just making sure investing happens entirely in the background of your life. It's beautiful, right? Your wealth literally grows while you work, sleep, and just live your life.
So once your system is running on autopilot, there's actually only one major hurdle left.
Can you actually stomach the extreme discomfort of a market crash without interfering?
Surviving that uncomfortable plunge, that's what separates the true wealth builders from everyone else. Are you ready? Let's talk about the harsh, unspoken reality of investing that tests absolutely everyone. At some point, your portfolio is gonna bleed red. It's not a maybe, it's a 100% guaranteed.
When it happens, boom, loss aversion kicks in. You log in, see the plunge, and sheer panic hits. Your brain instantly shifts into survival mode, literally screaming the most dangerous question. Wait, should I sell?
Or maybe you just stare at the screen, totally paralyzed, wondering, should I just wait this out?
Then the fear really spirals. What if it gets worse? This exact moment tests every single investor. So faced with the exact same terrifying drop, let's look at how two different investors actually react. One panics and sells for a quick sense of relief. The stoic investor embraces discomfort and stays put. Staying invested doesn't take bravery, honestly. It just takes a rock-solid, long-term plan to anchor you. History proves markets inevitably take violent short-term dips, right? But they consistently recover and grow over the years.
The ultimate trap is wasting all your energy trying to predict and dodge every single little market dip.
Instead, totally shift your mindset. Building real wealth is actually just about surviving those really dark downturns.
Ditch the crystal ball. Wealth comes from refusing to quit, staying consistent, and just constantly showing up. Because the absolute best superpower in investing isn't having a high IQ, it's just raw, unglamorous patience.
You need patience during the fun bull markets and absolute ironclad patience during the terrifying crashes.
You gotta accept reality. These painful declines aren't glitches. They're literally a mandatory toll on the journey.
Your goal isn't to perfectly time every single twist. You just need to stay on the road.
So, when that next inevitable crash finally hits your portfolio, which investor are you gonna choose to be?
Let's jump right in and decode how real wealth gets built. You know, getting rich isn't some giant, miraculous leap. It's really just a bunch of small, intentional steps. First up, nail the basics. Build that emergency fund, crush high-interest debt, and grab your employer's match.
Seriously, these defensive moves are absolutely non-negotiable. Stop debt from dragging you down so you can build momentum.
And here's the best part. You don't need a massive fortune to start investing. You just gotta begin.
So skip those crazy stock trends, okay? Pick a super simple plan and just automate your investments completely.
The real secret sauce here? Patience. It's staying locked in, even when the market gets super bumpy.
Yeah, forget the myth of that one lucky stock pick. Reality is just ordinary actions repeated over time.
Because when ordinary actions are repeated over and over, they compound into absolutely extraordinary financial results.
So, where are you at right now?
Building a safety net, killing debt, or making your first investment?
Hit subscribe for our next explainer. We'll show you exactly how everyday people hit this $100,000 milestone.
Ultimately, it's not your starting balance that matters. It's just making the vital decision to start. Will you?